good evening, good morning, or whatever time it is that you're watching this show. This is Money Mondays with me, Ezekiel Olande, and we are here at Icon Radio. We're here every Monday from 6 o'clock, and today we're having a wonderful conversation on financial literacy. And my guest is John Kamau. John works for ARVOCAP Assets. He's the head of growth and client experience. I got that right.
Oh, yes.
And he's just here to help us go through a couple of conversations. And we've entitled our show Smart Money Moves for Entrepreneurs. So, John, Salimia Mapans.
Thank you so much. And Ezekiel, good evening, everyone who is watching us from every part of the world. And it's good to have to see all of us and to know that we are going to have a very, very good discussion around financial literacy, and especially when it comes to SMEs. I hope you are ready with your pen and paper to take notes, but also to ask questions.
Good stuff.
Thank you.
So, John, we're just going to have a conversation, and I want you to first tell me a little bit about yourself. What do you do? What do you do when you're not doing what you do from Monday to Friday?
Yes.
And what are your passions as well?
Then
you can get into it.
Okay, thank you so much. I work at ARVOCAP Asset Managers full time from a Monday to Monday. But sometimes over the weekends I take a break. You know, the thing about money is that every person you meet, including your pastor, is a client. So money doesn't sleep. So on a day-to-day, that's where I work as the head of growth and client excellence, as you've said. I have a background in economics and financial analysis. I have also been in the market for around 8 years. So doing investment advisory, financial wellness training, basically helping people to make money the silent way in the capital markets. I'm a family person. And so when I am not talking about money, I am taking care of my family. And I have passion for young people because of the potential that they carry. And sometimes that potential just stays as potential if it's not extracted. So we talk a lot with young people and trying to help them to be able to get the best out of themselves. Yes.
I like what you said about potential, just the meaning of potential. If it's not extracted. That's a very deep point right there. Tell us a little bit about ARVOCAP Asset Managers.
So ARVOCAP is an asset manager, licensed and regulated by the Capital Markets Authority. So the name Avos, the first few days people used to confuse it with avocado.
Guilty as well.
Yeah.
Then you have some green on your logo.
Some exactly. Yeah, so that's the confusion. Yes. But Avo is a combination. ARVOCAP is a combination of two words, Avo and capital. Avo is a Finnish word from Finland, which means value, and cap is short form for capital. So the whole word to mean exactly, we are giving value to your money. So ARVOCAP has three main things that we do. We do investment advisory, basically talking to people and helping them with being able to choose the right investments for themselves. We also do have 10 licensed funds that you can invest in. From funds that invest in equities locally and also in the African and the global markets, to fixed income funds. Those are bond and bond equivalent funds, to Sharia compliant funds, to multi-asset strategy funds. Basically a whole spectrum of investments depending on your choice and your goal. The third thing that we do at ARVOCAP is that we do a lot of financial wellness. So at individual level, groups, chamas, SMEs, corporates, we all do that. Yeah.
Thank you for telling us about that. And for those who might be interested in finding more about ARVOCAP, we'll share the contacts later towards the end of the show. But today we want to talk about what you said, financial wellness. And April being a financial literacy awareness month.
Yes.
We thought that it could get into business.
Yes.
They are just running.
True.
And if they don't have smart money plans or conversations, it is very easy for them to get into the wrong type of investments.
True.
Or burn themselves out, without really thinking through what they should have done. So for me, and I think I like what you have said that for you, your passion for young people, but also for your organization about financial wellness being important. So maybe just to understand, from your perspective, why is financial literacy overlooked by a lot of entrepreneurs or people within the SME space?
Let me start by saying this.
Yeah.
Most people get into business as a by the way.
Okay.
You went to school, you studied something, economics, you didn't get a job.
Yeah.
So you think, but I think I can sell one or two things. Or, you have someone who is in a certain business and they help you to get into that business. Or you figure, I think where I live, there is a shortage of barbershops. I think I can start a barbershop. Exactly. So you see now, the orientation, the first step was you didn't go there in a nicely planned way.
You really didn't think about
you
it.
didn't think about it. We jump. Exactly. And you jump using head first. So exactly. Yeah. So you find that the foundation was that, this was not something that was planned for very well for most SMEs and most businesses. So the prioritization, or rather the priority becomes the product and the selling.
Yes.
I want to sell this, or I want to get into.
I want to make money.
I want to make money. So I want to get into a business, and that business is I want to open a butchery, or I want to sell clothes, or whatever that business could be. So you didn't have a very solid foundation.
Absolutely.
And definitely when you get in, now starting to learn from when you are inside becomes a bit of a challenge, because you see what happens is that now you start navigating the storms and the waters. So by the time you realize that you ought to have started with a bit of understanding and a foundation in financial literacy, it's probably when you are already into it, neck deep, and maybe some things have gone haywire. You have immersed yourselves in loans, and I'm very sure we are going to talk about that, and it's not working for you. So that's the biggest challenge. There was a report by the Kenya Bankers Association, I think it was last year. 60% and above of small businesses don't even have a form of record keeping.
60% and above.
Yes, I am a motorcycle person.
You're just
on a daily basis. Wake up, open my shop, make sales, go home. So that would tell you that there is a lot of financial literacy gaps, because if there were no gaps, then even documentation and paperwork would have come into play. So I think that is the biggest challenge, the reason why financial literacy is overlooked.
I like how you have framed that, because number one, I think it's true. People get into business because you're like, okay, I need to make extra money, or I need a side hustle. So you really didn't plan, and then also even just a bit of research.
True.
That is why you remember when we started getting the stalls.
Yes.
Umefungua stall, nimefungua stall.
Yes.
All selling the exact same thing.
Yes.
No product differentiation.
No nothing.
And you expect to make money. And remember, you're paying
rent. You have sinking cost. You have employees.
Yes.
You have your standing bills.
Yes.
It's the same thing that happened with Quail business.
Yes.
Sometime.
Absolutely.
Yeah.
It's funny you brought, because in our last conversation on the financial literacy, we actually did talk about that. You just jump in. M-Pesa. Umefungua M-Pesa.
Yeah.
M-Pesa.
Everyone. So there's nobody to sell to. Because even the person you would have sold to has their own shop.
They have their own shop.
And that's exactly the problem we have, because Kenyans, we are copycats.
Yes.
We look at what when we are looking at the biggest research that we do in business is what is selling. It's not even what solution am I offering in the market, or what is my competitive advantage. We look at business in terms of what is the business that is making money. All of us, before we figure out, we are in the same business, and nobody is making money. So that's the biggest challenge for SMEs.
Thank you for letting us just know that, and maybe just move on from your experience. What then would separate an entrepreneur who is building wealth from those who are remaining stuck in the hustle?
I think the first differentiator is one person has a goal, So he or she is being guided by what they want to achieve or where they are going. Because when you set a goal, then you put measures and means to take you there. As opposed to waking up every day, paying bills. You are busy. There's a difference between business and busyness. Being busy does not mean you are making business.
The hamster wheel.
Exactly.
Scenario.
Yeah. It's a roller coaster. Monday to Monday, doing the same thing. And without a long-term view of what we are doing. So for me, I think people who make it, they don't make it accidentally. Success is not accidental. It is planned for. And even when people say that guy was lucky, there is nothing that's luck. Luck is when opportunity meets preparedness.
I like that.
So when I am ready, I have done my books right, my paperwork is okay, then I meet Ezekiel who wants to invest in a business, then they look at my business and they can tell, this guy, I can invest, I have confidence investing here. That you cannot call that luck.
Exactly.
You will call that opportunity that met preparedness. And I think the biggest differentiator is lack of goal or having a goal. When you don't have a goal, speed is not an advantage. Because you will just be moving and you'll not even know when you are hitting your goal or not. So I think the biggest, because what happens with a goal, one, it helps you to be focused and also put in the discipline. So the discipline of doing the paperwork, discipline of making sure that I'm not eating everything, including what I would have used to buy stocks and all. Exactly. So you are able to do that. Having a goal is one of the biggest differentiators between people who make it and people who don't.
You are hearing it right here from John Kamau from ARVOCAP Assets. Today, ARVOCAP Asset Managers.
Yes.
Today we're just talking about smart money moves for entrepreneurs, and John is just giving us a lay of the land on financial wellness and financial literacy as well for you who is in business. And so if you have any questions, please just wake up for chat. We'll be able to attend to them. But John, as we continue, and maybe just to think about now financial systems, because I think when we started, you were saying the way people don't keep records, and that is 60% of people who are in business. Guys, we need to do better. And so my question to you is, what are the core financial practices that SMEs should really implement if they want to grow their businesses?
The first thing is record keeping.
Okay.
You need to keep a record of your business.
Nini
imeingia, ni nini imetoka. Number two, businesses are in cycles. If you are not keeping a record, you will not know what business cycle. And this is one of the mistakes that people make. And I'm very sure we are going to talk about even loans and how they sometimes make people get to us positions instead of making you a better person. But you find people don't keep records. So you do not even know your overheads. You do not know where you are spending more and where you need to cut on cost. You do not even know how much are your profit margins. You do not have a plan or a trajectory of how you have been, growing over the course of time. You do not even know whether you are making money or not. Because sometimes the business doesn't make sense, we shut it down. But because there is no record, you will find that you are busy rolling over. People confuse revenue with profits.
It's like I was going to tell you, please just break it down for us. Because I just saw this, I think I was reading, as I was getting ready for this, and how many people confuse revenue with profit. So explain to us, revenue ni nini
na profit. So the fact that your business is making a lot of turnover doesn't translate to money or to profit. Definitely, revenue is the whole sum of how much you are selling your goods or services. If you are a boda guy, and every day at the end of the day you have 5,000, that's revenue for you. But profit is now after you have deducted all your expenses. The fuel, you paid yourself, you paid kanjo, you ate lunch, you did all those things. How much are you remaining with? And if you do not do that, then you do not even know what are the profit margins for your business.
Yes.
So that means that even if someone was either to invest in your business or you are to even expand, you are doing guesswork.
Yes.
Because you do not know what is the biggest contributor to your business costs.
Yes.
And sometimes those are some of the things that we need to deal with. So one of the biggest things that entrepreneurs we need to do, SMEs and big businesses, make sure that your records are very good. Now, this one is not just good for you, because there are two things that we normally do when we want to expand a business. You either take a loan or you have an investor who is coming in.
Exactly.
So you have to be either investor ready, and you could be your own investor in that business. Because if I have to open another branch, I have a restaurant in town, and I want to open another branch, I need to have a very clear understanding of my expenses, everything, so that I know where I am going, what am I looking to cut down, so that I can increase my profit margins. The same thing if we want to take a loan. You know that I am taking this to expand this, and this much will go to this section. So record keeping is one of the things that, is a game changer when it comes to businesses. Number 2 is educating yourself. Let's all agree. When you are starting as an entrepreneur, you are the CEO, you are general manager, you are the HR, you are the T person, you are the customer care person. Basically, all that. You are the delivery person, all that. You ask a person, do you want my delivery guy to deliver? Yes, and you are the one who is doing it. Because the nature of that business, it's small. However, when you start growing, you need to do what we call specialization. Because you can only be so good at one thing. So you perfect it. And then probably get someone else, either hire or partner with someone who can complement that which you do not have. The biggest problem of business people, we die with our ideas. This is my idea, this is my business. Nani mimi ndio mwenyewe. No one else can do these things. Brother, you can only do so much. You can only do so much. If you are a good salesperson, you cannot be a good salesperson and maybe procurement and accounting and all those things. There's someone else to do it. After all, growth in business means this business being independent of you in such a way that even the day you are not there, the business can run. So there's a form of business continuity. So that aspect of as you grow, you now leave some of those tasks. Because remember, as a business owner, and this is what most people don't, most entrepreneurs don't do. A business owner is supposed to be a strategist. Absolutely. What that means is that get people to do the tasks. Don't be swallowed up in tasks. Exactly. Because you will not have time to think about expansion.
To think
ahead. So when you are looking from the business from outside, as opposed to inside, then you have a better view of growth and things that you can be able to do to enhance that business.
I like that. Number 1, record keeping. Are you investor ready? And how will you know how your business is working?
Yes.
If you're not keeping records of what's coming in, what's coming out. Also, you've been told revenue, see profit.
Revenue is not profit.
Please make sure you have that clear distinction so that you actually know what is coming in post deducting all the expenses.
True.
And then number 2, don't die in the business.
Yes.
Don't do everything.
Yes.
Specialize. Be the strategist.
True.
Have other people who can work. And I guess sometimes, John, this is the challenge. And I know you've already answered this. But I'm like, but sina pesa ya kuandika mtu. What do I do? I can't hire a full-time person. I can't afford, hakuna payroll. So what do I do?
Nowadays, things are much, much easier. We are living in a gig economy.
Exactly.
So what does that mean? I cannot hire a full-time marketer or content creator. But there are so many people who can do gigs for content creation. And people who are looking for opportunities. I will shock you. There was an organization that we had partnered with. It's a school. And they are always looking for students or placement for their students. And these are schools that teaches mass communication, journalism, photography and all that. And we get those people and they are so happy to do the job. You are just facilitating them. And they are so happy. And I think we ended up absorbing 2 of them. So what that tells you is that you should not limit yourself to saying I cannot afford. because there are so many people who are looking for opportunities. Number two, nowadays people work even now what we have called gig. I come work for 3 days a month. I cover what I was to do. So I don't have to hire a full-time accountant. I can just hire that week or that time when I need.
When you need
the resources. Someone to run payroll for me. Someone to do procurement. Someone to create for me content for digital marketing. You don't need to have a full-time person. The gig economy is helping. You can get someone to do that task when you need it. Yes.
I like it, and we actually did a show on the gig economy and just how big that gig economy is. If you missed it, please look for it hapo kwa mtandao. But this is good, John, because sometimes I think the good book says people perish for lack of knowledge.
True.
And sometimes you're thinking that I cannot do all these things. But if you just went into, as our parents would say, ingia tu hapo kwa the Google.
Ingia tu hapo.
Hapo tu kwa mtandao.
Yes.
And type whatever resource it is that you're looking for.
Yes, you will find it. In fact, nowadays TikTok has made things easy. Yes. You go there and they're even demonstrating.
Yes.
So it's so easy. Walk in this.
Show you what to do. Yeah, you can even learn.
Yeah, exactly. You can learn it. So there is no excuse.
Asante. Again, you're here with me, Ezekiel Olande, on Icon Radio. This is Money Mondays, and we're just talking about smart money moves for entrepreneurs and SMEs. And we are here with my guest, John Kamau from ARVOCAP Asset Managers. And I'm really just enjoying the conversation because you're really giving us some good tips for entrepreneurs. And I hope that you guys watching at home, like we started, John said, take your pen and paper, take the notes because this is good for you, but you can also pause and rewind.
True.
If you need to get to that. So back to still building financial systems. And you've talked about this as well, but one of the things that people struggle with, accounting. I don't have an accounting background. I'm speaking now for myself. Tell me, credit. I don't know all those things.
Foreign terms.
My friend. Tell me to go and, I don't know, wash the air.
Yes.
But now I'm running a business. I don't have this skill. Do I go back to school or... Because I think also, even if I'm getting someone to help, there's a little that I need to know.
Yes.
Because we have quacks out there.
True.
And
absolutely.
People have been messed up by quack accountants who you think you're doing your returns nicely, then one day Kare comes and they owe us millions.
True.
So what do I do to bridge this gap?
Again, and that's a very, very good question. We are very fortunate that we are living in times when you don't even need to be an accountant to do accounting. Nowadays, there are softwares. There are companies that are doing these things very, very easily. It's plug and play.
Affordably as well.
And affordably. In fact, it's almost like a plug and play system. For example, there is Zoho. Zoho is an ERP system. I think from India or somewhere. And you can customize that to your business. In fact, you can even put in your logo and everything, so you have your quotation, your invoices, your all those things. And, at the end of the day, it tabulates for you. This is how much I bought this thing. It does the stock take for you. How much is remaining in the stock. How much money you have made. You can input all those things. And these are things you can self-teach yourself. In fact, I even was shocked that the other day I acquired that software. And they're even sending someone to come and train you.
Oh, wow.
Yeah. So that now you are able to do that. So there are softwares. And there are so many. I could mention about so many of them. There is Udo, there is Zoho, there is, which other one? There are even ones for bigger businesses like Salesforce. There are just so many of them. And they are very affordable. I think for that, I normally pay less than 3,000 per month. And it does everything for me. If you do not, have don't want to go the tech way, there is Excel. So you cannot say that you are, there's nothing you can do. There's just something you can do. I have a partner. We have a partner at ARVOCAP. They're called Wild Digital. Wild is WILDE. Wild. They normally customize books for your business. stock take books, accounting books, so that if it's Mama Mboga and they don't have a computer to do the whatever, so they have a column they're inputting. I went to Gikomba or I went to Githurai, I bought these sacks. The motorcycle guy charged this much. I sold these bunches. Nicely done books.
I like that.
So they customize it for your business. And I am very sure they might not be the only ones. So we have absolutely no reason to say that I didn't do accounting. In fact, even for me, I don't like accounting. For many reasons.
You know, we always assume that you got finance.
I am telling you, I don't like accounting. My background is economics and I didn't like the accounting bits. So once I do my software thingy, then I now call an accountant for 2 or 3 days to balance my books and to do the KRA, whatever. And I am good. So nobody can say that they are absolutely not able to do something because there's something for someone wherever you are.
Whatever level.
Yes.
And I like what you've said about what Wild is doing because, you know, as has now been said, Mama Mboga na mtu ya
boda, yes.
You know, for them, you know, obviously, because you're always on the go, or you're in Soko, you don't have access to these things.
Yes.
But I like that you actually have a book that allows you and then
to
you can
record.
Just remove your calculator and quickly tabulate.
Tabulate, yeah, and you are good to go.
Or you take photos just for as well, because continuity is important.
Very important.
At least unaweza kuweka kwa simu so that God forbid
something happens and the book is it's messed up.
You have that.
Exactly.
So for every level of business, I think what John is trying to tell you is you have no excuse.
True.
To not know or to not have these systems put in place.
True.
Good stuff. Allow me to just move us a bit further along.
It's okay.
And talk about funding financial growth, funding and financial growth. Because we've talked about loans, and I think this is something that we need to consider a lot. And so maybe the first question is at what point should an SME consider seeking for funds to
expand their business?
Yeah.
Allow me to flip it a bit and say, when is loan not good?
Okay. I like that.
Because I want to start from the known. Because most of us have burnt fingers.
Yes.
Having taken loans and all that.
Yes.
If you do not get any other point today, please get this.
Yes.
Never take a loan to start a new business.
Right.
Whose cash flow and whose business cycle you don't understand. Whose cash flow and business cycle.
That's your camera. Just look there and repeat that. The people who are watching, just look at eyeball to eyeball.
Yes.
This right.
Let me say this.
Go ahead.
Never take a loan to start a new business whose business cycle and whose cash flows you do not understand. Most of us folks who are in formal employment, we want to start a side hustle. And I know I have a salary. I can access some 300, 500, 1 million. And I'm thinking, I need to start a business. So what business is doing well in my area? Or you ask your friends, and they advise you can put a nails business. Ezekiel, do you even know the profit margins for nails business?
Nails easy.
No. Easy is a Q-Tex and manicure and pedicure.
Absolutely.
But you are told, Ezekiel, you even go, this business is doing well. We can even walk you around and you can see this area doesn't have so many of those. You don't understand that business cycle. You do not even understand the profit margins. You don't understand the challenges of that business. That's exactly what happened to most people who started, who came after the second generation of people who got into Uber, Bolt. Because the story was, every day you make 3,000. Nobody told you that a driver can decide not to come to work. Nobody told you that business has cycles. Nobody told them that there are other needs.
The other needs, there's still the traffic cops.
There are traffic cops, insurance, exactly. You're not even at work. The driver is sick for 1 week, and you don't even have a replacement. No, you should never take a loan to finance a new business whose cash flows and whose business cycle you don't understand.
I like that.
If you get into a business, because I am doing so well selling Christmas trees, and you start that business in January, you will not see anybody coming to buy. You basically don't understand.
If you like October.
Yeah. Exactly. No, you just saw me or you just saw people talk about that business and you jumped in. If you have to start to take a loan to get into business.
Yeah.
Number one, take a loan to expand an existing business. And expansion does not mean building shelves.
Yes.
Because that is dead capital. You know what to do with loans?
Yeah.
You go find a shop in town.
Yes.
First of all, there is this notion of strategic location.
Yes.
The days and times we are living, strategic location is more than the physical location.
Absolutely.
It's about having a niche. What niche? What is my niche?
Yes.
Is my niche pricing?
Yes.
Is my niche delivery? Is my niche the unique products that I have? So the location should be the second and the last on the the third and the fourth and the last issue to think about. Yes. Because you find the other day I was buying my ring light, the ring light for my production, and I went on Gigi, found a seller. Yeah. When I went to their house, they are somewhere on 6th floor. Yes. Somewhere you can't even think. But this guy is selling. Because he's so good at digital marketing. So they don't even need somewhere where they are paying a lot of money. Exactly. But what do? Go and take a loan. Yes. I have found a very nice strategic place. First of all, that strategy comes with cost. Goodwill.
Yes. Which to me, I think it's
a rip-off. It's a rip-off. It's a rip-off. Exactly. Yes, we see you with 2 eyes. So you go there and you see, this is a nice place. You take a shop. Every day, a month, there is a 50K that has to go to rent. Yeah. And they don't even want to know whether you made that 50K or not. Then there are issues about employment. Yeah. By the time you realize, half of the money that you took as loan went to sunk cost that you cannot recover. You cannot recover. So when we talk about expansion, we are talking about buying more stocks. We are talking about probably expanding your marketing activities, not the brick and mortar way of expanding. So that now the money that you are borrowing in a very short time, you can be able to recover, or it can be able to pay itself. Yes. So back to the question about readiness for expansion. We have talked about record keeping because even a bank would ask you, how are your cash flows looking like? Let's look at it. So the first thing is that you have to formalize your business. Yes. Make sure that you are either being paid through a bank or through a pay bill. Yes. And if you ask me, a bank is even much better. Yeah. Or even a SACCO. Nowadays, I normally see there are SACCOs that are called deposit taking. Front office, FOSA. So they can accept. I've seen that. So you can actually channel your money there. So that the day you building your credit score. Exactly. This is a secret that most business people don't know. You need to build your credit score, especially if one of these 5 days you are looking to take a loan to expand your business. Once you have good records and they can show you normally pass money through here, then you ask yourself, how much do I need to be able to get to the level that I want? Because remember, growth is in stages. And we always want to feel we are on the last stage of it. So you want to imagine that this business that I'm doing today, that is giving me 50,000 a month, it can give me 2 million. You don't even want to imagine what are the challenges that would come with a business that is giving you 2 million.
Are you even ready?
Yes. Have you built capacity?
Yes, exactly.
So the thing is, how do you scale up that growth slowly by slowly? Something that you can take. I don't want to mention a name, but we all know this lady who was on TikTok was importing things for people from China, and got overwhelmed by orders. Yes. Fulfillment became a problem. Becomes a problem. So growth overwhelms you. Yes. You.
And that, growth is a good thing. We all want it.
We all want growth.
You didn't plan for it.
You didn't want it. You collapse. Yes. It collapses you. Before you build your name again, and you are at a place where people can trust you.
In this social media world,
I'm telling you, there will always be a reference.
What's there? There's something you said about opportunity and preparedness meets opportunity.
Yes.
That right there, I think that is what happened.
Exactly.
The opportunity was there, but there was no
preparedness. Exactly. So you need to be able to scale this business. Yes. Now let me give you a story. I met a young girl, and hopefully she will be able to watch this. I'll send her the recording. Right. The link. And she's in a business. Very nice ideas. Yes. She has very good ideas. Let me not mention what she is doing. But then she was coming to me and said, do you know what, John? I need 5 million to expand this business. Yeah. I ask her, where would you want to put the 5 million? First of all, what informed the 5 million?
Yes. Because you don't just
wake up and pick a number. Yeah, and then she said, I am into this. If I would get a production machine, I would be able to produce more at less cost. Then we started going it slowly by slowly. Yeah. And I asked her, first of all, how much is the have you thought about where you'd put that machine? Yeah. That comes with the cost of rent and all that. Things, yeah. What about the operator? What if it breaks down? Yeah. What if you do not get spare parts? I mean, a lot of things. Thinking through the whole process.
The value chain.
At the end of the day, do you know how much we thought she needs? 100,000.
From 5 million.
Yes, because you only need to expand your marketing.
Yes.
Because where you are being produced for, they can scale up the production as long as you have the market.
Also, she wanted to take the production upon
herself.
Yes.
And without thinking so much about the risk, we scaled it down and we ended up thinking about 100,000. Yeah. And that's what I proposed. Because we all figure this. I have a business and I am doing motorcycles. I have one. What if I had 10? If I am getting 3,000 a day, that's 30,000.
Exactly.
I can do. We are not thinking about. That's a loan an obligation that I need to be honored every day or every month. And it comes with a lot of challenges. Employees.
A whole lot of fireworks.
Exactly. All those things. So for you to be investor ready or for you to be loan ready, you need to understand the component of your business that needs to be expanded. Sometimes you just need to even build capacity within the team that you have.
Yes.
Without looking outside. Maybe skill up the team that you have, especially if they are doing well. What else can you do to help them? Would you pay for them for a course, maybe to advance if they are digital marketers or something like that, without thinking about the growth externally? Because if there is something that is sustainable in business, is organic growth. This inorganic growth that it's boom and here we are, it's not sustainable.
Yeah, because I mean, there's nothing holding it.
There's nothing holding it.
And so you become overwhelmed. I mean, I feel bad for like that lady that you're talking about. Because now, for you to really get back on your feet,
it will take effort.
Grow, even to get closer to where you are,
it will take.
It becomes a big problem.
True.
So, good and bad debt. How do I know the difference?
You know the good debt when you are by what you want to do with it.
Yeah.
We've said that you look at your business, I need to expand this business.
Yes.
Now, let me take one step backwards and say this. One, debt is not always bad.
Yeah.
It depends on how you are looking at that debt. Because again, sometimes we can demonize debt, and from an investment perspective, debt is a good thing because it's a lever. It helps you leverage.
Yes.
We've talked about the bad side of debt when debt is not good.
Yeah.
So, you're not going to take a good debt, or the debt is not going to be good if you do not have an end-to-end view of how that money will be used.
Absolutely. Yep.
Number two, debt is not good when the repayment cost is higher than the margins that you're making. So I cannot take a Shylock loan, for example, to expand my business. I am paying this Shylock at 50%, and I am making 20%. Yeah, they are less. You are always negative, exactly, for the life of that loan. And it creates what we call a debt trap. So you need to look at the cost of credit throughout the life of that credit. And this is where I normally advocate for people joining SACCOs. And people joining chamars. Because what happens with bank loans, and if you are a banker here, please forgive me for saying this, they always recalibrate the loan, adjusting it to inflation, adjusting it to interest rate,
the CBK's
basis rate and all that. By the time you are paying that loan, you have paid them 3 times. And the negotiations, even when business is not very good, they are a bit more rigid. So you need to be at a place where you can build cash flows or credit score in places where you can get affordable loans. You can also, as you grow, invest for the business. And I'm very sure we are going to get there. So that at sometimes you want to take a leap, you want to grow, instead of risking money that would put you in a problem.
Yes.
You have this reserve that you have built.
That you already have
it's a wall chest. It becomes like
yes.
a cushion for you.
Yes.
Because you have built reserves.
Yes.
And I'm very sure that we are going to talk about that. So, debt is going to be good when you have seen end-to-end use for that debt. And when you have calculated the cost of that credit vis-a-vis what you are going to make. And it makes business sense for you.
Thank you. I like, even the options that you're giving, and not pushing for any, but I think SACCOs, as you've said, are a very good avenue because, like you said, the cost of the debt is not so high.
It's manageable.
And also, you're not going to keep incurring these changes. Like a bank does. Shylock, please. I mean, for the love of all that is holy.
Yes.
At your own risk. Because we have had and seen so many horror stories.
I am telling you.
Of people being auctioned for loans that they were never going to be able to pay anyways.
It was a bad idea from the beginning.
Yes,
it's like our SGR.
Yeah.
A very good idea. Moving from, Mombasa to Nairobi and back.
In 4 hours.
But inflated like 10 times.
Yes.
So that is not going to make sense even one day financially. So as a social enterprise, good idea. But financially speaking, a debt trap.
So tuseme tulichukua pesa
pale tulichezwa pale tuli Shylock ourselves.
Money Mondays is a show. Smart money moves for entrepreneurs is the conversation, and my guest is John Kamau. He's from ARVOCAP Asset Managers, and we are just going through the importance of financial literacy and wellness for you, the entrepreneur, the person in business. But before we move on, John, we've talked about for businesses. But kuna watu who go kwa simu. Unaenda kwa, these apps. And they get loans from these people. And even for the businesses, I presume. And these people have some really predatory, and we're discussing this off air before we started. What is your take on these apps and things like that?
So first of all, let me again do one step back.
Yes.
The reason why people get into debt, two major reasons.
Yes.
You are either your life is like this and your income is like this most of the time.
Yes.
So you want to live here or you want to do this size of a project.
So you're not living within your means.
Exactly. Basically.
Yes.
And you find that that's why people don't have headroom for saving. Because otherwise, if you had savings, you'd not have opted for a loan. Something exactly. It's
all these people.
And they are ridiculously expensive. So that is number one. Number two, most of the time you find that people borrow money for consumption.
Yes.
You're borrowing money to go for holiday,
borrowing
money for sherehe, borrowing money to buy an iPhone, kupeleka mpoa holiday, sijui nini, birthday ya watoto, utume fare ikuliwe. All those sort of consumptionary loan borrowing.
Yes.
If you look carefully, most people don't borrow so that they can invest. And in any case, there is no investment that makes sense in those digital apps. Yes. It doesn't.
Yeah, because again, back to what you said, if what you're paying is less than what you're getting.
Yeah. You are not in business. You are not in business. You are not in business. If you look at a typical example, you are borrowing a loan of 2,000 shillings.
Yeah.
First of all, they will send you 1,700. 300 is they call it facilitation or something like that.
Yes.
And then that the 2,000 you will repay with 2,200 in 7 days.
Yeah.
I looked at the maths. On a normal day, you are paying between 2,000 to 4,000% per annum.
Wow.
Can you imagine? 2,000 to 4,000%.
I'm also thinking of the person on the other side of the business is
making a kill. They're making. That's why they are many, and you find they are keeping advertising. Because as much as they are defaults, but one person has recovered for me 3 or 4, and made money for me.
Yeah.
So what we are saying is that doesn't make money at all. Now there is one challenge that we have as a people. We like to compare ourselves with other people. We want to live a life
like the Joneses.
Exactly. Keeping up with the Joneses. So you want to live your life.
Yeah.
Let me say this. we have to accept that life comes in seasons and in sizes.
Yeah.
We cannot all be the same.
Yeah.
We are not in the same season. So don't compare yourself to me, because I could be eating the fruit and you're eating your seed. And tomorrow you'll not have something to plant.
Exactly.
Umekula mbegu.
Yeah,
So tunapiga sherehe sisi wote, but mimi nakula dividend, ninakula interest, ninakula profits. Wewe juu ya kujicompare, unakula mbegu. And tomorrow you will be the one talking about fake friends because I refused to give you 2K urgently. So instead of that, let's live within means. Those lending apps are quite a big challenge, and especially because they get you in something we call a debt trap. You will borrow John to pay James. You borrow Michael to pay John. It becomes like a cycle.
It's constantly
following you. And now it's like a whirlwind. It gains momentum as we progress. You started with 10,000. Now you owe 8 of them, accumulative of 100,000 within a very short time. So we need, if you are able to scale down your life, for you to get into a debt trap, you need two things. Either you reduce your life so that you live within means, or you increase your income. Now, sometimes increasing your income is not as easy, because that means either earning more at your place of work, which comes with either more responsibilities or promotion, which is not an everyday thing.
Just
wake up and get promoted. So what you need to manage are your expenses, so that you are not, competing. You live within or below your means.
I like that piece of advice, because if we're able to live within our means, we will avoid a lot of challenges. And just on a side note, my wife and I were talking about this yesterday, and she was telling me she was watching this conversation, and someone, one of these financial wellness coaches, and she just asked, who says you have to eat every day?
Who says? Exactly. Yeah.
Let your kids eat, because they have to eat. They're growing.
But you,
we can.
I'll even give you very good examples. Where you shave. Where you go for your barber. And like me, I normally shave once a week. Imagine that 100 bob or 200 or 300 doesn't look a lot on face value. But 10 times, that's 1,000. And more times. And some of those things. I discovered I use a lot of money on my shoe shining, whatever. So I decided, I'm going to do this from home.
We were taught those things.
Yes. I am telling you, it starts with those small things that you can be able to save 50 shillings here, 100 there, 200 there.
And something that is sustainable, but also easy to
implement. Exactly. Something that is you're not struggling to do. You stop doing your, your home delivery orders. I'm just going to do Glovo and above. My friend, live within means. Live within means. It's okay. I mean, it's okay to do your shoes. It's okay to go to a barber shop where it's just good enough for you. We are not in competition. And that competition thing is what is making people have challenges. And I would even tell you, even in families, comparison, such and such a place, such and such a family, they live like this. We want to feel like we are not missing out. The fear of missing out. We are also there. We belong. So you live in an estate you can't afford. Take your children to places you cannot afford. Even social circles like churches, they have become almost like competition platforms. Bas. Aje, how? There's a lot of pressure. Do something. I mean, your payslip can allow. We are living like we are in competition. And at the end of the day, there is a difference between success and happiness. You are the only one who knows whether you're happy. Success is so physical. I mean, success is judged by human eyes. What people see. I can tell. But I cannot judge myself wrongly whether I'm happy or not. I know for sure whether I'm happy or not. So, do that thing which is within means and that which makes you sleep. From when you sleep, ukilala, ukiamka, utako sawa. You're not scared the next call is from a Shylock or someone who is...
When the door is not...
wondering, who is that? So make sure that the things that you're doing and the expenses, you will be able to be at peace. When you sleep, when you sit down, you are at peace.
Good stuff. Thank you. Rolling on right ahead. Think about now investing as a business, and maybe the first question I would ask on that is, what does it mean for business to invest? And this goes beyond just growing your revenue.
So there are two ways of business investing.
Yeah.
One, as a business owner, you need to separate your money from business money. And that is the biggest challenge we have with small business SMEs.
Yes.
Because I own a bookshop and it's me, and I can take money and do something. Ni mimi too. Yes. So tomorrow I'm here and I'll do this. You need to separate business money from your personal money. That means that you need to cultivate a culture of paying yourself.
Yep.
Pay yourself a salary.
Yes.
Because from the business. So say out of this X amount of profit that we made, I'm going to take this percentage, and you stick with it.
And I like the percentage, not the amount.
Not the amount.
It can fluctuate.
It can fluctuate.
Yes,
yeah.
A percentage.
Exactly. You are sticking to that.
Yes,
take a certain percentage. Invest in yourself.
Yep.
Now you as a person, you can do personal investments.
Yes.
I have paid myself 100%. Again, out of that 100%, I am doing my personal investments. Every month I'm setting aside 20% of my income to my investment. Yes. I can do a bond, can do money market, I can go to a circle, whatever that is. I am paying myself.
This is now me as myself.
As the entrepreneur.
Yes.
The same case with business.
Yeah.
You made X amount. I paid myself 30%.
Yes.
I have another 20% that I need to invest for the business.
Yes. Yes.
And nowadays, there are fund managers like us at ARVOCAP Asset Managers. We are actually very happy because we opened, you can open a corporate account where you channel that 20% that goes there. You are investing for that business, because you will need to expand. You will need to build a war chest.
Yes.
And when you have cash, cash is king.
Yes.
Let me tell you how cash is king. There is a company called Berkshire Hathaway. It's a conglomerate owned by Warren Buffett. Okay. He's the controlling majority shareholder. That business is so cash rich that there is no opportunity that bypasses them.
Wow.
When there is an opportunity, when markets are crashing, that's why they are buying the dip. Because they have the money.
Yeah.
They must be the biggest shareholders in Apple.
Yes.
Biggest shareholders in Coca-Cola. Biggest shareholders in Kraft and Heinz. Biggest shareholders in NetJets. Biggest shareholders in... Why? Because they understand the importance of business investing for itself. Yes. Having some reserves. Because tomorrow, Ezekiel, you could be in a business and tomorrow your competitor is collapsing. Yes. And you have this money that you can buy them off out of the business. Yeah. Or there's an opportunity that has come up and requires quick cash.
Yes.
You don't have time to go to the bank, sign, go to your grandmother to give for you the forms, or do something.
Yes.
I have money. I jump into that opportunity. I make my money and I move.
Yeah.
So in business, we normally say cash is king. And so you need to build that king, that reserve. So business needs to invest for itself. For out of the money that you make sure that the business is investing. In fact, Berkshire Hathaway is, it's so big, and they are so big in cash. They are the ones who buy the majority of their shares. Their own shares. It's called the buyback. They do a lot of buyback of their shares because they have the money. And that's how cash rich businesses do. Most of us, we are asset rich and cash poor.
Yes. In fact, that was the next step I was going to say.
You are asset rich.
Yes.
You have a business. You have immovable assets, assets that you cannot even dispose when on times of need. But when it comes to cash flow, you are strained. You don't have the money.
Yeah.
So let the business build its own cash flows. So that you can take advantage of any occurrence in the market. And you can now be able to expand without being worried.
Yes.
Because let's face it, if you have to expand the business, you either take the route of loan or an investor. Both of them are expensive.
Exactly.
Because either you give away equity or these rates that you're going to pay on your debt.
Yeah.
So when you have cash flows, you have cut.
Yes.
You have cut out those expenses.
Exactly.
You are able to use the cash that you have. So that's why business, it's important for business to invest.
To invest in themselves.
Yes.
Good stuff. And so and you've already talked about this. So how can SMEs then begin to build those revenues? Thinking about for long-term financial growth.
So what you look at is one, investing in low risk investments.
Okay.
Again, don't take your money and put all of it in Bitcoin as a business, because the volatility. I'm not saying Bitcoin is bad. What I'm just saying is look for avenues that will grow your investment steadily, slowly but sure. You are very sure that when you need that money, you will find it. So that again, even the proceeds of that business can be able now to do something for you. Let me give you a very good example. At ARVOCAP, we have a fund called a bond fund. It's called Almasi. This is a fund that trades in bonds. We don't hold bonds, we trade. So while the government is giving 14-13%, we are looking at a net of around 20-21 per annum. Wow. This is because we are trading, we don't hold the bonds. Exactly. So if a business invested 10 million, they have an extra 2 million shillings at the end of the year, which you could have been, if your money was in a bank or elsewhere that is not earning, you'd have forgone that.
That's really,
I mean,
it's for buyer banks, but you guys players.
Yeah, true.
You do. Most of the family are bankers. So I'm talking to people I know.
Yeah. The banks are in the business of loans. They are not in the business of making money for you. That's why when you want your money to grow, you either go to an investment bank, a fund manager, because those are the people whose licenses mandate them to grow your money.
Absolutely.
So this business has put in 10 million aside. Now the 2 million that you made at the end of the year, you can plow it back to business. You can expand it. You can open a chain. You can, you have the liberty because you have money. Because what constrains people is that you do not have the resources that you need to expand and grow. Yeah.
Good stuff. Guys, we're almost getting to the end of our conversation here on Money Mondays with John Kamau. And we are just talking about financial literacy for you as an investor, rather as an entrepreneur, but also for yourself as well. And John has touched on some of those things that you yourself, like, are you paying yourself a salary? And the salary should be pegged on a percentage of your profits, so that you separate pesa za biashara
na pesa zako
because people, especially solopreneurs, it's just all over.
Kampuni ni yangu, mi pesa ni yangu, so mimi ndio kila kitu.
So even when you're doing your returns, those career can come for you when you're like, okay, but where is the business expenses? Where? So
you have no basis of what? Exactly.
So I want us to get to what I call busting myths. And so this is a quick fire round. And so I just want you to, these are myths that we already have out there, and I want you to bust them for us. So the first one is that you can't afford to save when you're just starting.
You can afford to save when you're starting, because you don't have to. It's not about the amount. It's the resolute, the decision to start doing it. It's not about the amount. You can actually start from anywhere.
Start from where you are.
From where you are.
Good stuff.
Yes.
Myth number 2, revenue growth equals success.
Revenue growth is not equal to success because a revenue could be growing, but you're also growing the costs. That means the net growth is negative. What grows your business is the profit margins and not revenue. Yeah.
Good stuff. Myth number 3, financial literacy is for accountants and finance people.
Financial literacy is for everybody because it's not just about managing the cash. It's also knowing, what do I do with the money? How does money make money for me? How do I differentiate between genuine and fake investments? Basically, financial literacy is for everyone because it's all around and not just for a specific group of people.
Good stuff. Debt is always dangerous.
Debt is not always dangerous. Debt is neutral. Debt is like a gun. A gun in the hands of a police, we mean security. In the hands of a thug, insecurity. So debt depends on how you are going to use it. It's neither good or bad. You need to be able to tell the debt what it should do for you.
Good stuff. And the last one, you need a lot of capital to begin investing.
You don't need a lot of capital to nowadays. It's very easy to start with as low as 100 shillings. There are platforms where you can start investing as low as 100 shillings. And even that, a lot of money that you're looking at, it's as a result of planning. You don't need a lot of money. You can start right where you are.
Good stuff. We need to land this plane. And so I just want us to get into a bit of takeaways and also for legacy thinking. So what mindset shift would you recommend to an entrepreneur stuck in that survival mode?
Get out of, break that box. Think outside the business.
Yes.
Initially, I never used to know what people say when you say think about outside the box.
Yeah.
But I came to realize is think outside that business. Look from the business from outside in, not from inside out. When you are out, what can you think about your business 5 years to come?
Yes.
So the first thing, you need a goal and have a roadmap.
Yes.
Say, this is what I want. Don't just be waking up every day, riding your motorcycle and you're paying bills and you're happy about it. 5 years down the line, what would you want to achieve?
Exactly.
Make sure that you have a goal that is driving you every day. So that even when things are tough, a goal gives you the staying power.
Yes.
You are able to commit to that because that's where you want to go.
Yes. And just to recap something that you said when you started, you know, the importance of strategic thinking. Not getting into the tactical.
The tasks.
Or rather, not. I mean, you can, but don't be
swamped up.
Yeah, swamped up by the tactical.
Yeah.
Have a bird's eye view of the business.
The business.
Yes.
And let me tell you, one of our most successful case of investment at ARVOCAP Asset Managers is our official rider. Is the courier guy.
Yes.
This guy started with, he used to see us post things on, our CEO post things on her status.
Yeah.
And he asked her, what is this that new money post? Can't I afford?
Yeah.
He sat him down,
right.
Talked him through. This guy said, in a year's time, I want to be, to formalize my business. Yes. Get CK licenses, do my cooler boxes for courier, register a business. Yeah. I do corporate. What is the path towards there? Yeah. I can tell you for sure that guy has built reserves in less than, say, 8 months now, of about 600,000.
Wow.
What will stop him from his dream by the time you are getting to September this year? Yes. Because he has a goal, he's committed to it, and he will know when he gets there because he has put a goal for that. Yeah. So, have a goal. It is a compass. It will guide you. It will give you the staying power, and it will help you to be committed even when things get tough.
Especially when the road is looking foggy.
Yeah.
You know,
focus.
This is where I'm going to.
Yes, for sure.
To get. What advice would you give to an SME founder who wants to build both business and personal wealth? So 2 things. Number 1 is be strategic. Yeah. Look at that business from outside in. Where are you headed? Yeah. And let me tell you, Ezekiel, there is no business that is small. Yeah. I am always amazed by Indians. Yeah. You can find an Indian, their only work is to make toothpicks. Only. Yes. Another one, their only work is to make that karatasi toothpick for that guy who is making toothpicks. Yes. Just that one thing. Yes. Think about how many people use toothpicks. Yes. Think about how many people use a ballpoint, a biro. Yeah, the pen, yes. Think about how many people use zips. These buttons. Yes. And there's that guy whose work is this. And you are belittling your business and thinking, hii biashara ya matunda inaweza enda wapi? Hii biashara ya kinyozi inaweza enda wapi? If you don't look at your business from outside and see I can open branches or I can become big or I can go corporate, you will be stuck at everyday tasks. You will be stuck at what you have been doing, and you'll be stuck at everyone else's way of doing things. So the first thing is to become very strategic. Number 2, be disciplined in the small things. Yes. Because we always think, I'm gonna be disciplined, I'm gonna hire account. Yes. No. Yes. Be disciplined in small things. Every time, record your sales. Every time, pay yourself. Yes. Every time, prioritize your employees. Pay them salary on time. Yes. Because if you motivate we always think that our biggest clients are the people we sell to. Your first clients are your employees. Your internal team. Yeah. Because if they are motivated and they're happy, they become your best sales team. They become your fans as well. They become your fans. Yeah. In fact, it's a term we use in business. They become your crusaders. There you go. They go looking for platforms to talk about you. So those small things, paying your employees on time, paying suppliers on time,
being disciplined at paying yourself, doing record keeping, be consistent in the small things. That is the key to even being consistent in big things. Because if you cannot be trusted with little, you can't be trusted with much.
In the Bible.
True.
We need to come to an end. I'm seeing my producer ananiangalia na ile jicho, meaning we need to maybe just the last question, then you can give us your final thoughts. If you could embed one financial principle in every entrepreneur's thinking, what would it be?
I think for me, the biggest financial thinking is principle is customer is king. And your first customers are not the people you sell to, are the internal team.
I like that.
Empower them. Let them, know that you care, you value. You value them. And let me tell you, Ezekiel, and we all know this, sometimes business is not doing well, so there is the lateness in salary or something happened. Make sure they know.
Exactly. Just communicate.
Communicate to them and tell them, we are going to be late, but we will pay you by this time. But again, when business is doing well, share with them. Let them know that they are valued. A lot of us have a habit of using other people. Use money. You don't use people, use money. Use money because money is the only tool. Money is the tool. Love people, use money. Don't love money and use people. Make sure that the customer is king, and the first customer is the people who normally stand in for you when you're not there. Your employees and your team. And that the team could be even your family or people who, like now we run family ventures. It could be those ones. If there is that one principle I have learned, especially wherever I have worked, especially because at ARVOCAP, we are valued. We normally feel valued. So even when you are going to talk about that brand, you are very proud.
It shows.
Yeah, you are very proud about it because you are talking not from a point of hype, but from a point of privilege and feeling that you are valued. Customer is king, and customer starts from your team. Yeah.
Final thoughts. Look at your camera and share your parting shot with them.
I will say something as my final thought, something that I had said. If you do not have a goal, then speed is not an advantage. If you are a business person, doesn't matter how you ended up in business. It could be you ended up in business accidentally, or you are introduced into that business, or it was just a chance, but already you are there. Make sure that you are very strategic about that business. Set goals. Number one, let these goals have timelines. Let these goals have a figure attached to them. Let these goals have a roadmap, because the difference between setting a goal and achieving it is the action, that roadmap that you put. Make sure that you have a plan. This is how I'm going to fund my goal, and make sure that business that goal can be cascaded, or it can, it has a growth path. Between 1 and the next 12 months is what I'm going to do. The medium term, that is 1 year to 3 years, this is what I'm going to do. Beyond 5 years, this is where I want to be. And there is a plan that you are putting. When you do not have a goal, speed is not an advantage.
Good stuff. I can't add anything to what John Kamau has said, but just to say thank you so much, John. For those of you who are watching, we could go on because John has a wealth of financial literacy, just to share. And John, thank you for sharing your time with us and just spending this evening with us on Money Mondays. I was talking to John Kamau from ARVOCAP Asset Managers. He is the head of growth and customer excellence. John, if we need to reach you, are you on social media? How can we get you?
We are on social media, ARVOCAP Asset Managers, on Instagram, we are on Facebook, we are on TikTok, we are on LinkedIn. But you also can reach us through our phone number, 0701 300 200 or 0701 300 700. Let me say that again. 0701 300 200 or 0701 300 700.
Very easy to remember. From me and the team here at Monday Mondays, Brayo, our producer, thank you so much. We will do this again next week on Monday. Kwaheri.